Most people should not use leverage ETFs. But if you pass the 12-question checklist that I have for you in this video, you might be among the top 10% of people that can actually benefit from leverage ETFs. So if you are looking to decide whether to invest in leverage ETFs, this video is definitely for you. The reality is the fact that despite the fact that leverage ETFs such as UPRO and the TQQQ have returned amazingly. UPRO, for example, returned 7,400% over the last 15 years, and the TQQQ returned 30,000%. These numbers are crazy, but still 90% of the investors that get involved in leverage ETFs still lose money. Why? The problem are not the ETFs itself, it's the person who is investing in these ETFs that is not ready yet. You can have like a PhD in finance and still lose money to leverage ETFs. Intelligence alone doesn't matter. What matters is time horizon, risk management, the psychology of investing, and having a clear strategy. In this video, I'm going to give you a 12-question checklist that is going to tell you whether you are ready psychologically and financially to actually get involved in leverage ETFs and make huge returns like I have been doing for the last 6 years. At the end of the video, we'll have a score. If you score less than 7, you should not invest in leverage ETFs. If you score from 7 to 10, you need to learn more about leverage ETFs. And if you score more than 10, you can go ahead and invest in leverage ETFs. Along the video, I'm going to give these 12 different questions, and you need to count how many yes do you reply to these questions. All right, are you ready? Let's get into it. And the question number 1 is, are you willing to hold these leverage ETFs for the long term, at least 5 years or more, without needing the money? Unlike popular opinion, leverage ETFs should not be held for the short term. Using leverage ETFs for day trading or short-term trading is a guarantee for disaster unless you can impeccably time the market, which pretty much no one can do. And that's why less than 10% of short-term investors make money. However, according to my simulations, I had run thousands of Monte Carlo simulations that tells us all the statistics and probabilities. If you have invested in leverage ETFs for 1 year period, you have 66% probability of making money. If you have invested for 5-year periods, you have 82% probability of making money. If you have invested for 10-year periods, you have 91 probability of making money, and for 15 years or more is 96% probability of making money. So basically, the longer your time horizon, the more likely you are of making money with leverage ETFs. Question number 2 is, do you have a clear investment strategy to invest in leverage ETFs? In my Henrik Wealth Academy, I teach different investment strategies, from buying the dip strategies, lump sum strategies, DCA strategies, pullback strategies, the 80-20 strategy, my 1/3 strategy. There are many different strategies. But the thing is that you need to have a defined strategy when it comes to investing in leverage ETFs. When do you buy? When do you sell? Because if you don't have a clear strategy, when there is a market pullback, when there is market crash, you just panic sell and just lose money. You need to study one strategy, one simple strategy, and stick to it. And if you do this over the years, you'll make a lot of money. Question number 3. Do you have a plan to monitor and rebalance your positions at least every quarter? Rebalancing is quite important because when your leverage ETF positions grow a lot, like TQQQ can grow a lot in a single year, you need to rebalance it to bring your position down to the previous level. So if you are looking to have a target position of 20% into the TQQQ, and at the end of the year, this position grew to 30 or 40%, you need to sell part of it and invest, trickle down to lower risk investments, okay? Not all your investments will be into leverage ETFs. If you do this, you will reduce the volatility of your portfolio and you will also automate profit taking. Now, just one small note regarding this, whether you should sell every quarter or rebalance every quarter or every year. In some countries, selling might be a taxable event. So you need to check in the country where you live. For example, if you live in the United States, maybe holding for 1 year or more, so rebalancing once a year might be more advantageous from the tax perspective than rebalancing every quarter. But I'm not a tax specialist. Question number 4. Will leverage ETFs be less than 15% of your entire portfolio? For most people, leverage ETFs should be less than 15% of their portfolio. In my personal case, it's like 50% of my portfolio, but I do this every single day. I live and breathe stock market, leverage ETFs. I'm a full-time fund manager. So that's why I have almost 50% of my wealth into leverage ETFs. But for most people, anything between 5 and 15% is more than enough. Leverage ETFs can really snowball the compounding effect and build generational wealth, but I'm not going to paint everything pink for you. They are quite volatile. They can have large drawdowns during market crashes. And if you have the majority of your portfolio into these leverage ETFs, it might be a big punch in the stomach if you have a market, bear market like 2022. So just in case, don't put everything into leverage ETFs. Question number 5. Do the rest of your portfolio consist into less volatile and more conservative investments or not? There is something called the barbell strategy. This was popularized by Nassim Taleb. All his books are very, very good, by the way. In the barbell strategy, you have the hyper-aggressive investments in one side of the barbell. On the other side, you have more conservative investments. So you need to have a mix of aggressive and conservative. The leverage ETFs are on the aggressive side, on the wealth building side. And then you need to have a wealth protection side. And of course, the wealth building can generate lots of wealth, can go up a lot, and you need to take a little bit profits and put on the side of the barbell that is more conservative. But it's very important to be diversified and not having all your entire portfolio into degen, volatile stuff, crypto and leverage ETFs, because if there is a market crash, it's not pretty. Question number 6. Do you have the mental capacity to handle 50 to 80% drawdowns without panic selling? There is one thing I say very often. Volatility is the price you pay for performance. There is no great investment that is not somehow volatile, okay? Tell me one single investment that gives you a lot of money and it's guaranteed, no risk. There is no such thing, right? So most investments that provide great returns, they also have some level of risk. But what I teach you is how to handle these risks and how to have the strategies to handle the risk. Like I have shown you before, if you hold leverage ETFs such as the TQQQ or UPRO for the very long term, 10, 15 years, you have more than 90% probability of making money. So short-term volatility should not be a concern, okay? But short-term volatility will happen. So do you have the mental capacity to handle 50% drawdowns or not? Let's take a look at the chart that I want to share with you. In 2022, during the bear market, the TQQQ went down by 80%, while the QQQ, the Nasdaq 100 ETF, went down 31%. The TQQQ went down 80%. One thing we can notice is that 80% is not 3x of 30%, which is good, right? But do you have the capacity to handle this kind of volatility? Because if the answer is yes, you'll have performed very, very well. Because in the meantime, even if you bought at the top of the 2022 market, you will now have very good and positive returns, okay? And if you had DCA since the bottom of the market in early 2023, you'd now be up over 680%. Next question. Have you experienced significant volatility in the past? Have you experienced a bear market in the past? For how long have you been investing? Because if this is the first year you are investing and you have never experienced a large bear market, it will freak you out once you start to see the market declining every month, okay? So the question is, do you have experience or not? I have experience because around the financial crisis, I was already investing because I started investing at 18 years old. I was around during many different market corrections and panics, and I was also already investing in leverage ETFs during the 2022 bear market. Question number 8. Are you investing in leverage ETFs where the underlying is an asset or an index with low volatility? Because this is very important. You know, you have probably heard of volatility decay, but volatility decay can only harm you if you are investing in highly volatile assets, and then the leverage will amplify that volatility even further. If you invest in broad indexes, Nasdaq 100, S&P 500, Russell 2000, or some sector ETFs that invest in a basket of companies, usually the volatility is quite low. If you are investing in single stock leverage ETFs, usually the volatility is very, very high, and that makes a huge difference. That's why in Korea, they are banning single stock leverage ETFs because they are already too volatile. So are you investing in leverage ETFs that are investing in baskets of companies, Nasdaq 100, S&P 500, semiconductor industry, and so on? Or are you investing in something that is highly volatile, single stock ETFs, crypto leverage ETFs? Please don't do that. Okay, question number 9. This is getting a bit technical, but this one is also very important. And the question is, does the leverage of your leverage ETFs that you are thinking investing in falls within the Kelly optimal leverage? The Kelly criterion is a formula that tells you, okay, according to the volatility and the expected returns of this asset, you can use a certain level of leverage, okay? Usually, the optimal leverage is not 1x leverage, so the normal no leverage. Maybe might be 1.5, 2x, 2.5, 3x. Usually, beyond 3x is not optimal. But there is a certain level, right? And you need to understand whether a 3x leverage ETF or a 2x leverage ETF or a mix of 2x and 1x leverage ETF is the optimal for you. Let's jump here on the chart. I want to show you an example. So here we have my Kelly curve indicator applied to the QQQ. Okay, we are using 10 years of data, and what we see here is that the Kelly optimal is at 3.6. So we should definitely use less than 3.6. So for the QQQ, we could use close to 3x leverage, or even better, we should use something called the half Kelly, which according to the indicator is 1.8. So close to 2x leverage will be actually the optimal for the QQQ, and 2x leverage for the QQQ is an ETF called QLD. Okay, every asset have different levels of optimal leverage. You need to understand this because when you go beyond a certain level of leverage, you start to have diminishing returns. As you can see here, if you potentially go to 3, 4, 5, 6x leverage, you have less returns, okay? You also don't want to be under leveraged. You also don't want to be at 1x leverage because 1x leverage is leaving gains on the table, okay? So you can always check this indicator, which all the members in my Henry Qualt Academy, by the way, know how to use. You can check the indicator and you can join the community, by the way, with a 7-day free trial. No questions asked if you cancel, okay? And you have a 5-hour-long leverage ETF course that tell you everything and all the strategies to be a successful investor when it comes to leverage ETFs and to reap off those 10, 20, 30,000% profits that it's possible with leverage ETFs. Question number 10. Are you investing in the long-term bullish trends? Okay. US stock market, for example, we have over 100 years of data. We have like 140 years of data. And 90% of the time, the US stock market is in a bull trend. But that's not the case for all stock markets in the world. Let me share with you this paper. In this paper that I really like, Alpha Generation and Risk Smoothing Using Managed Volatility. This is a crazy title. But the main point in this paper is that we scroll down here and the US stock market from 1885 to 2009, if we have invested with a 2x leverage, you'll get the best returns possible. Remember, from 1885 to 2009, you would have the financial crisis, you have the dot-com crash, you have the Great Depression, you have all the crashes that happened, and still the optimal leverage will have been a 2x leverage. And if we scroll down further in this paper, you have here the S&P 500 from 1950 to 2009, the optimal leverage will be 3x, the Dow Jones will be a 2x, Nasdaq will be a 2x. I think you get the point, right? But if we look at this example here, the Nikkei, which is the Japanese stock market, because it had been very volatile, it had a very hard time in the 90s, the optimal leverage is actually like very little. Don't invest in markets that are very, very volatile. So the question you need to ask yourself is, are you investing in long-term trends? I'm a big believer in the US stock market because for the last 70 years, 15 out of the 20 biggest companies in the world are always American companies. So for me, buying leverage ETFs in the US stock market is kind of a no-brainer. Question 11. Have you reviewed the history and the liquidity of the leverage ETF where you are investing? Usually, I always talk about the leverage ETFs that have at least a few years of history. and have lots of liquidity. They have like billions and billions of dollars of assets under management. They have millions of daily volume and liquidity. So if you want to buy or sell those leverage ETFs, you don't have slippage, you don't have any issues with liquidity, you don't have the cost of buying and selling is very, very little. But I have seen some people recommending like ETFs that have like $10 million of assets under management, very, very little liquidity. And that means that if you want to buy or sell during market volatility, those buying and selling might get very expensive, or you might not be able to sell at the price that you want to sell. So I will stay away from ETFs and leverage ETFs that have very little history and that don't have a large asset under management. Look at ETFs that have at least a few $1 billion in asset under management. Finally, the last question, but probably the most important, question number 12. Have you joined the Henry Qualt Academy, and have you taken my leverage ETF course, my 5-hour-long leverage ETF course? No one ever have made a leverage ETF course except me, as far as I know. It's a 5-hour-long course that tells you everything about ETFs and leverage ETFs and how to manage the risk and the investment strategies. So if you haven't taken this course yet, go ahead, join my community, 7-day free trial. You can cancel before the 7-day free trial if you don't want to stay, no questions asked, okay? And in the meantime, you can take the stock market course, the leverage ETF course, check my trade alerts, which have like an 80% win rate. Okay, now I'm super curious to know what was your result. Let me know in the comment section how many questions have you replied yes, okay? I want to know whether you replied more than 7 or less than 7. Less than 7, I don't think you are ready to invest in leverage ETFs. 7 to 12, you might be ready, but you need definitely to learn more about leverage ETFs. And if you have replied to 10 or more, yes, then you might be ready to start investing in leverage ETFs. But still, always keep learning. Investing in yourself is the best investment you can ever make. Investment in knowledge and investment in knowledge is really what allows me to do early retirement. I'm kind of retired in the sense that I don't need to work for someone else. I'm just helping you guys to invest. But I'm really curious to see what was your score. And either way, you should join my community and take full advantage of it. All right, guys, I hope you have enjoyed this video. Give it a like and subscribe, and I hope to see you soon. Bye-bye.